Good morning. You're watching All You Need to Know on Bloomberg Quint. Let's take a look at what's happened as far as the global markets are concerned. The US markets ended down sharply. The Nasdaq was down almost 1.4%. The other markets down 0.3 to almost close to 0.5%. Europe had a mixed trading session, but Asia at this point of time, except for Japan, which actually was shut yesterday, has reacted to the move that came in yesterday. The Hong Kong markets continue to bleed in lower. China is trading flat in today's trade. Let's take a look at the SGX Nifty, which itself is indicating a downtick, but there's still over 1.5 hours for our markets to go. But nevertheless, the setup currently looks at least on the weaker side. How did the ADRs pan out in trade? All the ADRs ended with a negative bias, and it was led by the frontline private sector banks, which were down anywhere between 2.5% to 3% in trade. And even the IT counters like Infosys and Wipro, they actually were down in trade yesterday. So overall, weak closing by the Indian ADRs in trade yesterday. Now, how did our markets pan out in trade? The Nifty was down 130 points. It was down over 1%. There was there was selling that was coming in as far as the mid cap is concerned. Surprisingly, the small cap managed to hold on. So it was the frontline Nifty stocks that led to the rout that came in yesterday. Even the Nifty Bank, because of the frontline banks like your HDFC banks and ICICI Bank, that led to the fall on the Nifty Bank. The PSU Bank was down 1.3% and probably could be under pressure today because of the merger that has happened, because some of the larger banks will be under pressure in trade today. Which sector did well? Surprisingly, real estate as a sector did well. It was up 1%. But FMCG and pharma are the two sectors which continue to bleed. FMCG is down almost 7% this month itself. Now, if you're looking at what's happened this month, minuscule gains coming in from IT, metal and pharma. But look at the cuts that have come in some of the frontline indices like, the PSU Bank, which is down 8%. Surprisingly, the FMCG index is down 7% this month itself. Now, if looking at the fund flows, both FIs and DIs were net sellers. Not too much selling coming in, but nevertheless, they are net sellers in the market. As far as the contribution to the Nifty is concerned, you can see the frontline counters, Reliance, HDFC Twins and ITC leading to the fall on the Nifty. Now, there was long unwinding that was seen on the Nifty futures yesterday. Open interest was down almost 1%. But on the Bank Nifty, clear fresh short positions were taken. Open interest was up almost 4% in trade. Now, if you're looking at where positions are taken, you can clearly see that put writers had to shed positions, but call writers are active from 11,500 to higher levels. They're even writing in at the 11,400 level, but put writers still have positions at 11,400 and 500, and the Nifty is trading below these levels, which means that if the Nifty stays at these levels, people with positions here and here will have to shed positions, otherwise the premium will keep on going higher and they will keep on losing money. Now, as far as where positions were taken yesterday, call writers became much more aggressive in trade yesterday, given the fact that premiums started falling. And since premiums rose on the put side, put writers were forced to shed positions in open interest, and probably that can still happen if the Nifty manages to fall in trade today. Now, only one stock is there in the F&O ban, and that is Adani Enterprises, because Balrampur Chini comes out of the F&O ban. In terms of the PCR, the Nifty PCR came down. The Bank Nifty PCR also came down below the 1 level. A couple of stocks that I want to point out. First of all, it's Oracle Finance. Yesterday, high open interest bid up of 27% on the long side. Technically looks extremely strong. Couple of block deals, so should probably move in even higher today. Engineers India is another counter which is slowly and steadily moving higher on decent open interest build up. It was up 10% in terms of open interest build up. ICICI Prudential saw fresh shorts, open interest build up of 10%. And the last stock that I want to point out is Manappuram Finance. Has actually fallen from levels of 115 right up to 85 levels. Open interest build up was almost 6%, and the company saw fresh short positions that were being built. But these are all the domestic cues that we need to watch out for. Let's go across to Paul Allen for all the top international headlines.
The head of the IMF is warning that a no-deal Brexit would have clear economic consequences for the UK economy. Christine Lagarde says she remains an optimist, but recognises it's entirely possible that Britain could crash out of the EU next March without a new trading relationship with the single market. She added that whatever the deal might be, it will not be as good.
Look, any deal, all likely scenario of any deals will most likely lead to a weaker economy than the economy as it is now.
Former Argentinian President Cristina Fernandez has been indicted for corruption, with the judge calling for her arrest. She's accused of leading a scheme that collected bribes from business figures from 2003 to 2015 in exchange for government contracts. The ruling calls for Fernandez to be detained and for the seizure of about $100 million of assets. Southern China is clearing up after the passage of Typhoon Mangkhut. The storm killed at least 2 people as it moved into Guangdong, Guangxi and Hainan provinces after battering the Philippines, Hong Kong and Macau. The system is weakened over land but is still forecast to bring heavy rains and strong winds throughout Tuesday. At least 69 people were killed in the Philippines and about 40 are still missing. And on the eastern seaboard of the United States, torrential rain from Hurricane Florence is forcing hydroelectric dam operators to run generators at full speed and open floodgates that haven't been used in more than 20 years. The Tennessee Valley Authority began increasing output last week to make room in reservoirs. Duke Energy has been doing the same in North and South Carolina. Reservoirs were already at seasonal highs. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
This is obviously coming right at the beginning of the World Economic Forum Summer Davos. The news that Donald Trump is going to levy 10% tariffs starting next week on some $200 billion worth of Chinese goods. And if the Chinese, they decide to retaliate as they promise, well, Donald Trump says he'll go ahead with those additional tariffs on another $267 billion. This is, we're shaping up for a prolonged fight, and it's going to be at the forefront of most discussions here at Tianjin. Again, we are at the World Economic Forum. They call it the Summer Davos annual meeting of new champions, and trade is going to be in the spotlight. So we know that the 10% tariffs are coming starting next week, but then they're going to escalate up to 25% starting January 1st. That's going to give American businesses time to adjust and also perhaps look for other alternative supply chains in other countries. There are some exemptions scrubbed from that initial list, some 300 different products scrubbed, including baby items like high chairs as well as baby car seats, also some technology products that sell really well in the United States like smartphones, and also some industrial chemicals. So it'll be interesting to see as well, though, the kind of pain that the Americans are going to be feeling at the cash register if this will indeed make prices of goods more expensive.
In a big move towards dealing with the stress in the banking sector, the government has decided that 3 public sector banks, which is Dena Bank, Vijaya Bank and Bank of Baroda, will be merged to create an amalgamated banking entity. The expectation is that this amalgamated entity would be the 3rd largest bank in the country and would have a significant presence across the country, as well as a large employee base that will work with all the customers of each individual bank. Now, this proposal will go to the respective boards of all these 3 banks, and all 3 boards will come back with a scheme of amalgamation, which would then lead to the process of the merger. Remember that this process will take some time because each bank's board will have to consider the benefits and the cons of such a merger taking place within the banking sector. The government in its comments has said that none of the employees or the customers of any of these banks will be impacted by this merger at all, and that there won't be any retrenchment of employees. And remember that this is an important point whenever the question of consolidation in the banking sector comes up, because ideally typically there are situations where bank mergers lead to some kind of retrenchments, some kind of resignations as well as removals of employees wherever banks feel that there is no optimum level of benefit that is being derived for the bank. Typically, whenever such a merger conversation takes place, a question is also raised about the health of the amalgamated entity. Remember that Dena Bank is one of the weakest banks in the banking sector with a gross NPA ratio of over 22%, nearly 23% in fact, and a very low capital base. It is also under the prompt corrective action of the Reserve Bank of India, which means that it cannot lend out any fresh loans to any of its customers. So this becomes an important point of contention as to what Dena
Bank will contribute to the final amalgamated entity. Now, experts that have spoken to Bloomberg Quint say that because of the small size of Dena Bank, the amalgamated entity will not be impacted much by the NPA as well as capital issues. In fact, the amalgamated entity will have a healthy capital base and will be able to grow in the coming few years. The last big merger that took place in the banking sector was the SBI merger, which started back in 2017. That was when 5 of the associate banks of State Bank of India as well as Bharatiya Mahila Bank were merged with the parent entity. That merger, while it took some time, it did not lead to any major disruptions in the way the bank functioned. So most of the experts are taking some comfort from that experience and saying that this current merger that is being talked about will not lead to any major disruptions, but will lead to actually benefiting the banks as well as its customers.
We would be having more branches in some of the states where grossly underrepresented: Andhra Pradesh, Karnataka, Tamil Nadu, Kerala, etc. If you ask what could be the benefit for the Vijaya Bank, look, Bank of Baroda brings a huge foreign currency position to the table. Technology is there, and there are a lot of things we are doing on the transformation journey which could be of value to them. So I think if you look at it in a broader sense, what does it do to Bank of Baroda? It strengthens the position in Maharashtra. The consolidated entity is now stronger in Maharashtra, stronger in Gujarat, and for Bank of Baroda in particular, there is a greater degree of strength in terms of branch presences in the 4 southern states.
Stock of the day is McLeod Russel on back of the disposal of 2 of its more tea estates to company around. It has sold in the Assam Bargang tea estate to Amguri, which is going to be a subsidiary of the company for a sum of around 60 odd crore, and Harchura estate, which has been sold off to Goodtrick for around 32 odd crore. These are the 2 tea estates that the company would be selling off, and MOU has been signed off to that effect by the parties yesterday. The due diligence, the date of completion would be completed after the due diligence by the buyers and the approvals once they get the required permissions for this sell-off. And overall, these 2 estates contribute to around 4% of the annual turnover of the 2 companies. This is the third tranche of sale that the company is basically embarking upon. The first one, where the company sold off 4 tea estates for around 140 odd crore to Lakshmi Tea, and then they sold off 8 tea estate to MK Shah for a sum of around 331 odd crore. In terms of the contribution to the overall financials, as I just mentioned earlier, it's going to be a 4% overall to the annual turnover. The Harchura tea estate contributes to around 1.5% to the annual turnover that we saw in FY18, and the Bhargan tea estate contributes to around 2.5 odd percent. If you look at the balance sheet now, the objective behind the move is obviously to get the money to pay off the debt, as well as the buyback, which is worth around 100 odd crore. If you look at the balance sheet position of the company right now, the cash in the bank equivalent stand around 80 odd crore, and if you look at the total borrowing figure, that is to the tune of around 500 odd crore.
Shifting focus to currency and bond markets, the Indian rupee yesterday weakened against US dollar after investors showed their disappointment to government's latest measures to stem the currency fall. The rupee yesterday closed 0.9% lower at 72.51 levels a dollar after sliding as much as 1.1% intraday, thereby snapping its 2-day rally. Well, speaking of the bond market, sovereign bonds sold off briefly on speculation that RBI will need to hike repo rates to stem the currency fall, and hence we did see yields inching towards 8.18% intraday before erasing gains to drop to 3 basis points to end at 8.1%. On the global front, the dollar edges 0.1% higher in the early Asian hours after US imposes a new round of tariff on Chinese goods, thereby fueling demand for safe haven currency, that is dollar. And do remember, dollar index ended 0.5% lower yesterday, largely weighed by strong pound and euro amid optimism over prospects of a Brexit deal with European Union. And lastly, speaking of dollar rupee now, it is trading flat in the non-deliverable forward markets, which indicates a flat opening for Indian rupee in today's trade.
Well, there are three key stocks that you need to watch out for in trade today. One of them is Tata Motors, where JLR has said that they've cut the schedule at UK plants, citing Brexit concerns. So, this is just an added headwind for Tata Motors. Watch out for that name. Next on the list is Orion Pro Solutions, not a very liquid stock, but the company will provide its services to Bank of Khartoum's UAE and Bahrain branches. You could possibly see some positive reaction on the back of this contract win that we are seeing for this company. And finally, Lakshmi Vilas Bank will be in focus. This is on the back of ET reports, which says that it's Aeon Capital Partners, which has now joined the race to buy up to 30% stake in the bank. The bank, of course, will use the funds that it raises to as its growth capital, and also to improve its capital adequacy ratio, which has fallen below 10%. So ongoing developments that we are hearing about Lakshmi Vilas Bank. So that's another stock that you need to watch out for.
The board of SEBI will meet today to mull on a various number of decisions. Among them would be relaxing the foreign ownership rules. This is something which has been bugging the market, and the HR Khan committee report has also spoken about relaxation of these rules. So the board will be deciding on that. Aside of this, the board will also be looking at the TK Viswanathan committee report, especially with respect to seeking powers to intercept phone calls and for surveillance enhancement. There's not much expected there, except for the fact that SEBI may ask government of India to allow that relaxation. Over and above that, the SEBI board will also look at the committee report on insider trading regulation, where the entire scope of insider trading is being increased or a little bit diluted, so that it doesn't become onerous on some of the companies. It is also going to look at the enforcement of the NSCL probe, how the brokerages, what is the end result of it in terms of actions taken against brokerages and the ongoing case. So the board will be apprised about the updates on that case. Aside of that, the SEBI board will also look at mutual fund expenses. This is something which the committee, subcommittee of Mutual Fund Advisory Committee met, and they recommended some of the guidelines with respect to reducing our expenses as and linking it to performance and the average AUM of the fund size. That's something which is expected from SEBI's board meeting. Aside of that, the Justice Dave committee report, which talks about expanding the scope of consent, especially with respect to including fraud within the consent, especially FUTP, which is fraudulent and unfair trade practices, and going ahead with consent with confidentiality, so that it cannot be revealed going forward. So these are some of the recommendations which the board of SEBI will be mulling, and the decision will be expected post market hours.
Let's now look at some of the top stocks to watch based on the delivery data that was released yesterday. The first stock on the list is Oracle Financial. Now, Darshan highlighted a couple of block deals over here. The stock managed to gain more than 5.5% and saw delivery buying of nearly 600 crores. The delivery volume surged about 280% for itself as compared to its 5-day average, while the total volume surged nearly 5 times as compared to its 5-day average. Second stock to watch out for SBI Life Insurance. Now, that was down about 4% in trade and saw delivery selling in excess of 120 crores. The delivery volume more than doubled for itself as compared to its 5-day average, while the total volume surged nearly 3 times as compared to its 5-day average. Last and final stock, Divi's Labs. Now, that was up about 2.6% and saw delivery buying of nearly 200 crores. The delivery volume surged about 113% as the total volume surged about 140% when compared to its 5-day average.
Now, there are several stories that you should have a look at on the website, not least of which is the latest on the US-China trade war and also updates from last evening about the consolidation in the banking space and the merger therein. You'll also find all the live market action right here. Now, some of the other stories, let me just mention them to you. The Supreme Court has allowed the sale of Piramal Healthcare's Saradon, GlaxoSmithKline's Piriton, and a couple of other drugs that were banned by the Health Ministry, acting on a plea by drug makers and pharma associations. And rating agency ICRA has downgraded IL&FS debt to the extent of 12,000 crore rupees to junk. This is the second downgrade of the company's debt by the rating agency in a fortnight. The company's total debt, by the way, stands at around 91,000 crore. That's all you need to know going into trade today. Up next is Indian Open, so do stay tuned. This is Bloomberg Quint.